Hey man, I'm Jusko from ProudMoney.com. In this video, we're going to look at the best CD rates on the market today and also do a little discussion of what a CD is and the pros and cons of it if you don't already know. Before we do that, I'm going to ask you to please subscribe to this YouTube channel if you have not already, and if you have already, I thank you for doing so. So a CD, certificate of deposit, is a deposit vehicle where you put money in and you basically are making a little more of a commitment than you would to a lot of other savings vehicles because of the fact that you don't get the money back for a certain amount of time, but the upside to it is that you are getting a higher rate on the money that you are depositing in, and you are able to lock in that rate for a certain amount of time. Now, there are upsides and downsides to locking in a rate, which we will talk about as well. But first, we're going to look at what the best CD rates are as I make this video. Now, they do change often, so before I even talk about kind of who the top 3 or 4 are at different CD term lengths, I will tell you that there are kind of a handful of banks and credit unions that I would say are oftentimes the tops of these lists. So if you're watching this long after the time we actually made this video, you could sort of start with these particular companies and say, I'm going to look there first and then do some additional research. So those 7 banks and credit unions are CFG Bank, Bread Savings, Connexus Credit Union, Crescent Bank, Marcus by Goldman Sachs, Synchrony Bank, and Discover, and maybe I would throw in Capital One there, although they're a little bit below those others. Now, if you look at that list and you say, I'm not familiar with a lot of those names, where are the big banks that I know? I will tell you that a lot of the big banks have pretty dismal rates when it comes to CDs. So if you just go on the assumption that, well, the big banks are probably somewhat competitive with everybody else on the market, that would be an assumption that you do not want to make. All right, so let's look at those rates. In each category, I'm going to pull out the top 3 or 4 banks or credit unions that have the best rates. We are going to start with the CD that has the least commitment of the ones we will look at. That is the 6-month CD. As I make this video, Synchrony Bank, your best bet there, 1.65% APY or annual percentage yield. There is no minimum to open that CD, which is why they take the top spot. However, Marcus by Goldman Sachs, the same 1.65% APY. They do have a $500 minimum, probably for most people. You're not going to open a CD if you don't have at least $500, but maybe you would. A step down from those two, you have Capital One and Ally Bank, both offering 1.5% with no minimum to open either of those CDs. Now, looking at the 1-year CDs, you will see that the rates go up quite a bit if you are willing to commit your money for a full year. Tops here is C&G Bank offering 3.05% APY with a minimum $500 deposit to open that CD. You have Connexus Credit Union offering 3.01%. However, you have to have at least $5,000 in order to open that CD. Then you have Bread Financial. Some people will know Bread Financial more for their Comenity Bank divisions, which offer a lot of retail store credit cards. Bread Financial, or Bread Savings in this case, offering 3.0% with a $1,500 minimum in order to open that CD. If you are looking for a 1-year CD that has no minimum, the tops is going to be Synchrony Bank at a 2.6% APY as I make this video. Next up, 2-year CDs, and not everyone offers this term, but many do. The rates are going to go up a little bit more if you are willing to commit your money for a little longer period of time. Tops here, Bread Financial or Bread Savings, actually in this case 3.5% APY, $1,500 minimum to open that. Connexus Credit Union, again, 3.21% APY. However, you do have to commit $5,000 in order to open that. Synchrony Bank giving a 3.0% rate, no minimum in order to open that CD. A couple others at 3%, but you do have a little bit of a commitment, is Marcus by Goldman Sachs, 3% with a $500 minimum, and then you've got Crescent Bank, a New Orleans bank, also offering a 3% rate on their 2-year CD. That one requires a $1,000 deposit. If you're willing to lock it in for 3 years, those rates are going to go up even a little bit more, although it's starting to flatten out a little bit. However, if you feel like those rates are good and you want to lock them in for 3 years, your best bets are going to be CFG Bank or Bread Savings, both offering 3.55% APY. As I make this video, Connexus Credit Union, again coming in here high on the list, 3.21%, but you have Synchrony Bank and Marcus by Goldman Sachs offering 3.1% here. Now, if you have a chunk of money that you are willing to squirrel away for 5 years in order to lock down a rate that you feel decent about, the 5-year CD, same at the top, it's CFG Bank with a 3.65% APY, a little higher than that 3-year number, $500 minimum there. Bread Savings, again, offering the same 3.65%. And then you do have some banks that are offering 3.25% for 5 years with no minimum. Synchrony Bank coming in there again, and then also Capital One. So those are the best rates as we make this video. Now, just to expand a little bit on how a CD works so you understand what you're getting yourself into, I've already said the sort of basics are the fact that you are committing a certain amount of money for a certain period of time in order to get a higher rate. However, if you decide you want your money out before the end of that period, 6 months, a year, 3 years, 5 years, whatever, you are going to pay a penalty. How much is that penalty? Well, it can vary from bank to bank, but sort of a rule of thumb often is that if your CD is of a year or less, your penalty is going to be 90 days worth of interest. If your CD is beyond a year, up to maybe 4 or 5 years, then you would pay 180 days of interest, which you could think of as about a half year's worth of interest. And then when you go beyond 4 years or maybe beyond 5 years, depending on the CD, it could be a whole year's worth of interest that you would lose if you decide you want your money before you've reached the end of that period. Another thing to understand about CDs is that they are not like checking or savings accounts. You cannot put more money into the CD after you have established it. A CD is really like you sort of giving the bank a loan for a certain amount of time and then taking that money away, and then at the end of the period they give you the money back with interest. So you can't put more money in. If you have more money later on, you can open another CD, but you can't just tack it onto the CD that already existed. Also, we talked about withdrawals and the penalties that might happen. You should also understand that if you do a withdrawal, you are withdrawing everything. It's not like you can say, okay, well, I just want to take out a couple $100 or something out of my CD and maybe I'll replace it later. No, if you do a withdrawal, you're getting everything back, but you're going to pay that penalty. Now, because interest rates are always changing, and as I make this video, they are trending up, what some people like to do is something called CD laddering, where if they have money that they want to invest in a CD, they don't put it all into one CD for a certain term. Instead, they split it up into multiple CDs, and they'll get themselves a 5-year, a 3-year, a 1-year, a 6-month, and that way one of them is always going to be maturing at a different time, and then they can open a new CD with that money at whatever the new interest rate is. Now, if you do that, you're making somewhat of a bet that interest rates are going to continue to go up. If they go down, then obviously you'll get your money back, and if you open a new CD, it would be at a lower rate than the previous CD. But that is a way to make sure that you're not going to just be stuck sort of at the bottom and you've made a commitment to a certain interest rate and then see everything skyrocket beyond that. So CDs are sort of an interesting little deposit vehicle. If you're someone that has only ever had checking or savings, they are a way for you to make a little bit more on your money, but again, you're making a little bit more of a commitment. But if you have a chunk of money that maybe you are saving because you are going to buy something in the future, maybe for a down payment or for a car or whatever, and you could have that money sit and get a little bit more on it, maybe that's when you would open a CD, or maybe you just have it as part of a overall investment strategy where that's your sort of conservative investment versus being out in the stock market or whatever. But another option out there, the rates as I make this video have definitely gone up from where they were not very long ago, may continue to go up. Questions, comments, put them in that comment section below. Otherwise, I thank you for watching, and as always, please go to proudmoney.com where we do credit card reviews, we talk personal finance, we talk deals, and all sorts of other fun stuff too. If you're not going to go to the website or you are not going to leave a comment, maybe you would like to watch this video.